Good day, traders. Richard Jacobs here, and welcome to the Underdog Weekly Perspectives Report, where we reflect on the trading week that's passed and then form some views and perspectives on what we think the market's going to be doing over the coming week. I've been away from the desk for a few days, traveling on business. But just looking at the week that's passed, let's start off there with this daily chart of the top 40. And what's worth noting is, and maybe it's not a bad week to have been away, we had the start of this continuation move to the upside. You recall, push to the upside, retracement, very shallow retracement back into this 23.6 Fibonacci level, into this previous price structure over here, and then it looked like the start, at the beginning of last week, it looked like the start of this continuation move to the upside. And that's off what we highlighted in last week's report as well. We had a bit of positive divergence with the market the stochastic putting in this lower low, while price put in this higher low over here. So we had a few bullish days as that pushed to the upside, but really no follow through from there. And instead, as the week sort of played out, we had a bearish candle printing on Wednesday, and then the market sort of just put in these lower lows and lower closes to the downside over here. So at the moment we're really just meandering along sideways, a bit sideways over here, with no real structure that's been put in place since. Stochastic is rolling to the downside, sitting in neutral territory, looking a bit bearish at the moment. And from here, when we find ourselves in a position like this, for me it's really a case of waiting and to see what the market does next, because either we're going to violate this low over here, put in a lower low and see a continuation of this retracement into a deeper territory. Remember, we'd highlighted that potential price structure level over there. We've still got Fibonacci levels to the downside over here that could possibly be tapped if we see the market pushing down. Alternatively, we could see the market popping up through this previous high over here, these all-time highs really over here, coming in at around about 50,400, 50,500. So we're sitting at the moment at about 49,300s or so. So we've got about 700 points to the upside, and if the market should push to the downside, you've got about a 500 points, 600 points to the downside that could move. So it's quite a wide range, which could provide opportunities for some intraday trading. But certainly on these daily charts, I'd wait for either the market to push through the top of this range or to start pulling back further before I got too excited about what price structure was doing next through the daily lens. Having said that, let's throw over to the intraday. I don't usually show the intraday on the weekly perspectives report, but as I said, I've been away for a while, so for the benefit of our daily subscribers as well, let's have a look at the intraday analysis. And pretty much what you can see there is, the market be putting in these higher highs, and that's the continuation move to the upside I was talking about. Then we got a break of structure to the downside on Wednesday over here. Market then retraced nicely back up into previous price structure over here. That would have provided some opportunity. So let me just get my line tool. Notice how the market pulled back up into that previous price structure, almost reversed on a dime, and then put in a continuation move to the downside. So we had some nice intraday trend for a couple of days, Wednesday into Thursday. Then we got this complex retracement. Market puts in the lower low again. Market then puts in this deep retracement, continuation move to the downside, doesn't hit previous structural lows over here, and really this is the through the intraday lens, this is the range that we're looking at on that level, where the market's just sort of chugged along sideways to a large extent. And here, for instance, what we would be waiting for is a violation either of that a break of structure to the upside through that high over there, which comes in at around about the 49,568, or and we're pretty much looking at the out of market counter now. It's just before 5 a.m. We're pretty much near the top of that range, or we could see the market pushing down and putting in the new structure, or the lower low really which would be a move below about 49,200s, 49,175s. So we're keeping an eye on that range as well on the lower time frame to try and gauge some kind of a directional bias to be trading on the shorter term time frame. Now, so overall, it's a bit of a wait and see game in terms of which way the market goes. At the moment, it's looking fairly bullish into the open, so you'd expect some kind of a push. But as you know, the market tends to tap these ranges sometimes, as has been the case over the past few weeks before it pushes in the opposite direction. Sorry, I'm just jumping back to this daily chart because one of the things I haven't highlighted is what's been happening on the volatility. And as you can see here, after that push to the upside, the volatility is starting to die again. It's pushing to the downside again, which is quite unfortunate. So we're still not seeing that volatility spike, that volatility increase, that momentum that we're looking for as we head into the second half of September. And that's something we really need as we go into the last quarter, in order to give us some momentum as trend trading, as trend traders. So that's pretty much what's happening in our top 40 at the moment. Let's have a look at what's happening in the international markets, starting off with the with gold. This is something I highlighted, I think, to our daily subscribers. I'm not sure if I highlighted it in last week's report. What we had in gold is we had the breakout of the range, and we were looking for this pullback into this previous price structure over here, lined up with a 38.2 Fibonacci level. It's still playing out at the moment. So I'm going to leave the structure on at the moment. We're around about those levels, so we're still seeing that pullback, that slow pullback on the daily into this previous price structure level, and we'd be eyeballing that level to try and get involved to the long side. Lines up around about the $1,300 level. We're at 13.19 at the moment, and we've touched lows of about 13.14. So nothing much to do at the moment except watch and wait. But it certainly looks like the retracement at this stage is playing out back into that previous price structure. Look at it through the hourly lens. This is something we did highlight to our daily subscribers. We had that break of structure to the downside over here. We were actually looking for a retracement back up into and a close of that gap over there, but instead the market put in a bit of a, if you drill down to a lower time frame, you might have seen this as a potential double top over there. But certainly a more complex retracement before it put in the lower low and continue to the downside. Then we had this deep retracement here, back up almost into this previous price structure highs over here before the market continued to the downside. So what we're seeing at the moment is, and let's just clean this up a bit, we are seeing a bit of range coming in here on the hourly, where the market is, it's putting in the lower low, but it's not a lower close, and it's really, in the past few days, it's retested the high of this range as well. So again, here, what you want to do is you want to wait on the hourly to see if the market can actually break out of this range, either to the upside, to the downside, doesn't really matter. Put in the lower low. The price structure on the hourly is bearish at the moment. But certainly, we could see it start to rally off these the bottom of this range over here. So keep an eye on that, either for the breakout to the downside. Range bound traders could try and ride this to the upside, top side of the range, and again, breakout traders could be really patient and wait for it to break out to the top of the range. So all kinds of options, I suppose, available there for gold traders at the moment, depending on your trading strategy and your trading style. The currency, nothing much happening in the currency over the past few days. Much of a muchness really, no new structure really printing. We're still sort of just chugging along inside that broader range that we've been highlighting over the past few months. So nothing to do on the dailies from our perspective. On the hourlies, we've had a we had that break out of this, we had that break out of range over here, a pullback back into previous price structure there and a continuation move to the upside. So we've got definitely weakening trend in the quite a strong weakening trend really that we've seen materialize on the hourly charts, which I suppose has in theory it should have supported our markets, our local top 40, seeing the rand weaken. It hasn't really, to be honest, which is quite interesting. So we're going to keep an eye on what's been happening on that front. But at the moment, the price structure does suggest a weakening trend in play. We're getting a bit of complex retracement at the moment. It looks a bit messy. But as long as we don't, let's just have a look at these levels. Those would be the two levels really. If we put a Fibonacci retracement on this previous move to the upside of this last leg up, we've pulled back into the 50% level, into this previous price structure. The only thing you really got to watch out here for, which is, let's just have a look. We've got a potential head and shoulders, left shoulder, head. It's not a great looking one, but right shoulder. So we do see a violation of these levels over here coming in at around about 1311s or so. That could open the door for some potential downside and deeper retracement within this broader impulse leg to the upside over here. So keep an eye on that as well. I'll just make a note of this so we can do a follow-up. In our next recording. Right, so that's what's happening on the currency side of things. Let's have a look at the equity markets. Starting in the east, what's happening on the Hang Seng? Yeah, I mean, it's still in that on the daily, we're still pushing up nicely at the moment, bringing higher highs, higher lows. Not really confirmed continuation move to the upside of the shallow retracement over here. So also like our market, a bit of a I suppose a range bound affair playing out over there at the moment. Let's have a look at the hourly. Yeah, I mean, hourly is quite messy actually. Let's have a look at what's been happening over here. You'll recall what we highlighted, this daily subscribers. We had this range bound, we had this range that we'd highlighted over here, and we said if the market broke through the bottom over here, we'd be eyeballing this this gap close to the downside over here, and that's in fact what happened on Wednesday. We got a break and close below out of this range. A bit of a retracement, a very shallow one over there. Didn't really even put in a blip on our price structure through the hourly lens, but maybe on some of the lower time frames you would have seen that retracement playing out, and the market's pushed down, and it's really just, I mean, it's put in the lower low. We've got a break of structure to the downside. That gap's been closed over there, so we can take that off. So that would have been a potential trading opportunity you could have taken. As things stand now, let's just clean up the charts a bit. We've got a break of structure to the downside. We're in retracement. It's a pretty deep retracement. Yep, it's pulled back all the way into that 78.6, which already puts the alarm bells on. Yes, we've pulled back into that previous price structure over there, but the alarm bells would be around the fact that we pulled back into that 78.6, and as you recall, that's an area we don't really like as trend continuation traders. Once we pull back into those levels, we tend to favor a break to the upside over there. So let's keep an eye on what's happening. The market could pop to the upside, break structure to the upside over there, and we could see the bullish trend continuing. If you are one of those traders looking for continuation move to the downside, obviously it gives you a very high potential reward to risk, because you'd be you'd set your stops above the swing high, and you'd probably shoot for targets either back at this previous price structure over here or even this one over here. But the failure rate on those trades tend to be higher, just given the fact that the depth of this retracement means that the market, the bears have really been struggling, and we could see that that pop to the upside and the break of structure to the upside. So just be wary of that. So bullish looking Hang Seng for the most part. Let's have a look at the DAX. Yeah, this was the potential, well, not the potential, the actual double bottom that we'd highlighted a couple of weeks ago, which triggered, and it's still playing out. You know, we're still shooting towards those targets over there. So if you did get involved in the trade, great stuff, you're well in the money, could potentially de-risk the trade, and you approaching target levels over there at the moment, coming in at around about those 12,650, or slightly higher at, over there. So that's still looking pretty bullish to the daily lens. Hourly as well, yeah. In fact, on the hourly, we've actually got this breakout of, again, we highlighted some range to work with, and we've got the breakout of range playing out at, there as well, with the market putting in this higher high right there. If you want to, let's just move that back down. You know, if you're looking to potentially trade what's happening over here, I'd wait for a retracement at this point, depending on how far the market goes. I mean, we've got this. In fact, I'd just be looking at this breakout level. Sorry, that one's probably more relevant. There, you know, some kind of a retracement back into that price structure and a continuation move to the upside if I wanted to get involved on the DAX. So DAX looking bullish. So lots of bullish looking markets at the moment. FTSE. And finally, you know, what we're seeing on the FTSE is that finally, you know, this market has broken this price structure support level over here that we've tested 1, 2, 3, 4, and on the 5th time we've actually just broken to the downside over there. That's quite a significant move. It's been holding for so long. Having said all of that, you know, what we're seeing at the moment is you know, the market's still in this bigger range bound area over here, but certainly that is a significant break over there that we did see the market make to the downside. So we'd widen this range a bit to over there, because this would be the break of structure level that we'd be eyeballing now. Market 7200 really needs to hold. Before it was a 7300, so we've had a 100-point push down, which is quite significant. But this would be the 7200 would be a significant, or 7187 technically would be a significant break of structure to the downside that we would be keeping an eye on. But certainly much, you know, well, I wouldn't call the DAX, the FTSE bullish or bearish. We've been complaining about how choppy it's been and how difficult it will potentially be to trade through the daily lens. But certainly a more bearish view coming through there. And here you can see it on the hourly. Market pushes down, puts in a new structure low, and then a lower close, and now we've got a retracement playing out. So short term probably a bit more bullish because you've got this retracement playing out, but certainly things not looking great at the moment. We'd be looking for a retracement back into this previous price structure level over here, right there, as a potential opportunity to get short. Pulls back just inside the 38.2, between the 38.2 and the 50 perhaps. That would be a nice spot to potentially get short for continuation move to the downside if you wanted to trade the FTSE on this time frame. And then finally the US, the S&P. I mean, all that's happened here is we've seen the market put in the higher high, higher close, so we're continuing in this nice upward trend. So we have that complex retracement, and eventually the market, you know, it's been a long-winded continuation move, but it's pushed to the upside. So trend following or trend continuation traders were really patient, could have benefited over here on this push to the upside through the daily. So that's all looking fine really. Next step would be to wait for some kind of a retracement again back into this previous price structure levels over here, or back into this you know, previous price structure lows for continuation move to the upside. So again, all bullish. Sorry, going up the long time frame. All bullish in terms of what's happening on the S&P on the daily, and pretty much on the hourly as well. It's been a bit choppy. market put in this. Let's have a look at this actually. Market will be put in this higher high. Then we have this push to the upside. Then we actually had a double top confirming over here, which is kind of messy. Notice how the market pushed to the upside, couldn't put in a higher high and higher close, pushed to the downside, activated the double top, sorry. And some traders would have gotten short here, unfortunately, and that would have been wouldn't have lasted very long. Market chopped sideways and then broke to the upside, so you would have been stopped out if you tried to trade this double top over here. That's that happens. You just got to roll with that, and that's why it's important, to do your back testing, be comfortable in terms of your expected values, your estimated win rates, etc. when you're trading these patterns. But at the moment, it's certainly looking bullish, with that break to the upside and continuation move to the upside playing out. Again, what we would wait for is some kind of a retracement back into previous price structure over here to try and get long the market. So if we put all of that together, it certainly looks like we're going to get a bullish start to proceedings this week. And wouldn't perhaps not surprising given that it fell off over the last 3 days of last week's session over there. But really, our previous analysis in terms of the price structure on the daily pretty much, or on the top 40 pretty much holds. We'd wait for some kind of a break out of this potential range that the market's printing itself into. Either we need to see a push down, or we need to see a breakout of structure to the upside. Wouldn't be surprising to see some choppy trading action to start the week as it moves sideways in this range but in fact, it could really move sideways in this range for the entire week. So not great prognosis for trend traders on the daily charts. But more on the but more with a tighter range on the lower term time frames, with the 15-minute charts. If you want to analyze the 1 hour charts, there are going to be potential trading opportunities over there, as you see the market move in one or other direction. But the short-term bias on the shorter term time frame is certainly to the upside as we start the week. So guys, that's pretty much it from our side for this week's report. I wish you all the best for the trading week, and daily subscribers, I shall be chatting to you next in the probably at the end of the day, end of Monday, just to give you an update on where proceedings are. That's all for now. Chat to you soon. Cheers. Bye.